Welcome to our segment on foreign information reporting for foreign entities. If you own an interest in certain foreign entities, the IRS wants to know about it and you're going to have to file some forms. So if you have an ownership interest in a foreign corporation, you may have to file Form 5471. If you have an ownership interest in a foreign partnership, you may have to file Form 8865. Generally, you have to report ownership interests of 10% or more. And remember, this 10% or more also can be achieved by owning it indirectly or constructively. So if you own an entity that owns a foreign entity, it's possible that you indirectly own the foreign entity through the level 1 entity. Well, what about indirectly? Indirectly is a little bit more complex because you're deemed to own a percentage of any subsidiary entities that are owned by an entity in which you directly own an interest. It's best illustrated with an example. Let's say I own 20% of a foreign corporation, and that foreign corporation in turn owns 20% of another foreign corporation. So now I directly own 20% of the first corporation, and I indirectly own 20% of the subsidiary corporation. I would need to report both corporations. There's also something known as constructive ownership. Constructive ownership is that you're deemed to own certain shares that are owned by your family members. So let's say your father owned 5% of a foreign company and you own 5% of a foreign company. Because your family members together you own 10%, you're going to meet that threshold. You're most likely going to have some filing requirements. When it comes to disregarded entities, you may have to file Form 8858. A disregarded entity is essentially a tax transparent entity, much like a United States LLC, if you're familiar with that concept. Essentially, the tax owner of a disregarded entity is required to file this Form 8858 and report any income from that foreign disregarded entity. Now moving on to foreign trusts. If you've created a foreign trust, i.e. you're the grantor of a foreign trust, you've received a distribution from a foreign trust, or transferred assets to a foreign trust, you're going to have some reporting requirements. Form 3520A and Form 3520. You might be thinking to yourself, I don't have anything to do with a foreign trust. But keep in mind that most foreign pensions are considered foreign trusts. So if you're paying into a foreign pension or receiving distributions from a foreign pension, you're going to have a filing requirement. Finally, passive foreign investment companies, or PFICs. These always need to be reported. You're probably looking at this saying, what's a PFIC? This doesn't apply to me, I've never heard of it. Well, PFICs are generally foreign mutual funds. So if you own any foreign mutual funds, you're going to have a filing requirement to report your ownership in those foreign mutual funds. And that's going to be Form 8621. The failure to file these forms can be pretty expensive. So for failing to file a 5471, for example, the penalty is $10,000 per failure to file. It can go all the way up to $50,000 after the IRS notifies you. Failure to report a foreign trust can be punishable with a penalty of up to 35% of the value of the trust. It's pretty steep. Maybe one of the worst penalties is the unlimited statute of limitations. Generally, the IRS can only go back 3 years to audit your return. But if you failed to file one of these international information returns, the statute of limitations never starts to run. Essentially, the IRS can go back and audit that return forever. Plus criminal charges if you knew you should have filed these forms and didn't. Thank you for joining us in this segment, Foreign Information Reporting for Foreign Entities.